Hello options traders, welcome everyone. I think most of you know that from time to time I do post videos on various technical indicators, and I do that mostly for the new traders in this group, although there are certainly wonderful tools for advanced traders. But especially for the new guys, that they're always saying, well, how do I know when to get in or when to get out of a trade? And that can be a hard thing to decide, especially over the short run. And if you're looking for short-term decisions, you really have no other choice than technical analysis. So I do that to help people out, give you some little pointers about some ways that you can figure out how to time your trades. I did get a special request for one called the Parabolic SAR. It's a fairly common indicator. The good news is that it's really easy to use from a practical standpoint, and that's how I'm going to start out the video. However, for those who really want to know all the ins and outs of the indicator, it's probably one of the more complicated ones. Lots of if-then conditions. So I'll do that more in the second half of the video for those of you who really want to know the mechanics of it. So let's take a look at the Parabolic SAR. First of all, the indicator was developed by J. Wells Wilder. And yes, you've probably seen this name before. It's the same person that did Wilder's Average True Range and Relative Strength Index, or RSI. I do have videos in this group here for both of those as well. He's also responsible for another one called the Average Directional Index, or ADI, and of course, the Parabolic SAR. The SAR in Parabolic SAR there stands for stop and reverse. And as you'll find out in the chart, that's what it does. It'll track a downtrend, let's say, to a certain point, and then it will reverse. And it will show you where that trend most likely stopped. When we get to the top of an uptrend, you will see that the indicator will reverse and signal a downtrend. However, it's important to understand that for this indicator, at least to really use it well, and where it works its best, is for trending stocks. So if you're in a stock that is moving sideways over time, probably not the best indicator. And if you do use it, you're going to find that you're going to get a lot of false signals and whipsaws, and probably just not the best time to use it. So make sure that you're looking at a stock that is in a very well-defined uptrend or downtrend before turning to the Parabolic SAR. Now, the formula for the Parabolic SAR is fairly simple, and in fact, if you look it up on the web, you're going to see, you'll say, it doesn't look like it's all so complicated. But again, there's a lot of if-then conditions. But the basic formula says that your PSAR formula, the new value, is going to be equal to the old, or what we might call the initial PSAR value, plus what's called an acceleration factor, times the EP here is actually what's called an extreme point, minus that initial PSAR value. So yeah, that might actually look kind of complicated, but believe me, it gets a lot worse when you look at all the if-then conditions, and that's why it's so nice to have the computer do it for you. So for now, let's jump over to the E-Trade platform and take a look at what the Parabolic SAR looks like on your chart, and then how to use it. So here we are in the E-Trade platform, and I'm going to use NVIDIA for the stock. And to put the Parabolic SAR on, at least for E-Trade, it's very simple. You're just going to come up here to Studies, click there, and from your drop-down menu, now you'll see that if you've used it recently, it will show up here in your recents. But if not, come down here to All Studies, click there. You'll get a nice alphabetical list, and right over here at the top, under the P's, Parabolic SAR, just click there. You're going to find out there are what are called your acceleration factors. There's a minimum and a maximum. The minimum default is 0.02, the maximum is 0.2. If you are trading stocks, I would keep this to 0.01. But if you're trading, let's say, currencies and commodities, I would probably leave that to 0.02. And the reason for that is that when you're trading stocks, you're just not going to get as many false signals and get whipsawed out of positions. But you're certainly free to change these as you feel the need. But I would certainly not change the maximum here above 0.2. From there, you can change the color. Let's put something bright, like a nice bright yellow, so we can see it. And then we choose Save. And there is the Parabolic SAR, or the Parabolic SAR. Now, first of all, why does it get that name? Well, parabolic is a derivative of parabola, and I think many of you know from math, a parabola is a type of a function that'll look kind of like a smile or a frown. It's a curved shape. And that's what you're seeing here. You're seeing this curved upward shape, and then you're seeing this curved downward shape. They kind of represent a parabola. So it's a parabolic type of shape. And then again, SAR stands for stop and reverse. So the first thing to notice is that your parabolic SAR shows up as a series of dots. This is your actual indicator right here. And when you are in an uptrend, such as through here, your dots will appear below it. When you are in a downtrend, such as through here, then your dots will clearly be above it. Now you'll also notice that as that trend continues, that gap will start to reduce. So for instance, you can see there's a fairly big gap through here, but as we get closer and closer to this bottom, the distance between your candles and that dot down here starts to get close. Probably a little easier to see over here. If you take a look at this uptrend, you see how wide the gap is down here? And then as the trend continues, it starts getting closer. And that is partly because of this acceleration factor. And so as it gets closer, in a sense, it's becoming more likely that it's going to get tripped out. So in a way, this indicator almost acts like a trailing stop order. And here's what I mean by that. What you're going to find is that, let's actually zoom in here a little bit so we can see it better, that as your SAR is moving up this way, it will continue to do so until a candle, some price point during the day, so this red candle right here, do you see how it broke that upper dot? All of these other candles up through here stayed above these dots until we hit this red candle. And it doesn't have to break it by a lot. As long as the price at some point comes down below this dot, then the parabolic SAR is going to flip sides. And it's going to come up here. And what it's plotting here is what's called an extreme point. And I'll show more about how that's calculated in a little bit when we go to the Excel spreadsheet. But what it is, it's the highest point recorded in the previous period. So when we were in this uptrend, what was the highest trade? Right there, top of that shadow right there. And so that's where that dot's going to line up. Now our dots will stay above the candles until what happens? Look at this candle right here. That high broke that dot. The SAR flips. Then what happened? We actually did break up here. It flips again to the upside. This is why you can get these whipsaws if you are in a sideways motion. So once again, it's best to use the parabolic SAR when you see a very long, well-defined trend. But you can see that once we got into this very heavy downtrend, the dot stayed above until what happened? This red candle right here broke this dot right here. And then the parabolic SAR flipped sides. So as I said before, you can kind of think of this like a trailing stop order. So if you think about that, if you were trading the shares of stock and you put a trailing stop, maybe a point or two below the current price, comes up here, suddenly the price turns and it trips you out. And so that's kind of the way that you want to think of the parabolic SAR. You can certainly use it as a way to enter a position, but I think it's better suited as a way to exit a position. What's a good time to maybe lock in those gains? So again, in this instance right here, if we were using the options, we would be rolling all through here. But once we see it flip, now does it mean that we have to close it on that day? Not necessarily. We might want to wait for one or two candles after, but you should at least see a flag saying this is not looking good when our SAR has flipped positions. And down here we see this nice big downtrend, and then once we see the SAR flip, you should probably think about closing that position, in this case if it's a long put or short shares of stock. And we see that the trend now did reverse and turn to the upside. So the parabolic SAR is really just that simple to use. Stay in it as long as the trend is up, or as long as for the uptrend again that your dots are below. And then when you see it flip, that would be a potential signal to exit the position. When you're in a downtrend, as long as the dots are above, that's how you can identify this downtrend, and you stay in it until it flips. Or maybe this would be your time to initiate a new position in it. So that's really how simple it is to use. Now, as I said before, for those who want to know all of the ins and outs of how it works, it is one of the more complicated technical indicators out there. So if you're not interested in that, that's pretty much all you need to know for working the parabolic SAR. But for those who want to know more about the intricacies of the formula, let's jump over to an Excel spreadsheet and take a look at how these dots are actually created. So here's an Excel spreadsheet, and what I did is I just downloaded some past data. I'm using NVIDIA. So here's the open, high, low, close. And to the right, we've got some different headers here. We need all of these pieces of information to calculate the PSAR. One we talked about before is the extreme point, the acceleration factor. Then if you remember in that formula that I showed, this piece of the formula tells us by how much we're going to increment to either add or subtract from that PSAR value. We need an initial PSAR value, and then from that we're going to do some checks to see if it's broken any key points, in which case it might create a new PSAR value. And then from there we can determine if the trend is up or down. Now also you're going to see at the top I've put in the increment 0.02 and the maximum of 0.2. So again, if you're trading shares of stock, I would make this at 0.01. It's not going to make a huge difference, but it's going to give you a little bit more of an assurance that you're not going to get the whipsaws. But take your pick. There's not really a big problem with using 0.02. So how do we calculate our PSAR values? Well, first of all, we talked about the extreme point. This is just the highest trade that took place during that uptrend or the lowest trade during a downtrend. So let's go back to the chart and take a look at what this means. So for instance, when we were in this uptrend right here, we would need to know, let's say on this day right here, the extreme, the highest point that we reached was this one right here. Then it looks like this next green candle here, we reached another new high. That would be an extreme point. This would be the next extreme point. Then this one, then this one. Now notice on this green candle, we hit a new extreme point. The next day we didn't. That shadow is just a little bit lower, so this would still be our extreme point. Then the candles dropped a little bit, so this would still be our extreme point, and that would remain until it looks like we hit this green candle. And then this becomes our extreme point. So that stayed all the way up into the trend. It looks like this candle right here was probably our extreme point for that period. Now to the downside, it's just the opposite. When we're in this downtrend, this looks like this first red candle here would have been our first extreme point. It's the lowest point so far. So we would record that. These two here would not beat it. These are higher. This wouldn't beat it. All of a sudden, boom, we hit this red candle. That's a new low. That would be an extreme point. Then this one would be a new extreme point. So that's what it means by the extreme point. We just have to figure out what is the lowest trade at that point. So because we don't have any data at this point, we just have to pick something. So what most traders would do is say, well, I'm going to look at my chart over here on this blue line, and I can see that it's an uptrend. So my extreme point might be the high trade of the day. So I'm just going to plug in 253.20. Honestly, it doesn't really even matter what figure you use, because an interesting characteristic of the PSAR is that the math will quickly correct itself. So you could even just kind of make up a number here, and then as you go through about 2 or 3 days of data, it's going to get you back on track. But that's probably going to be a good starting value. Our acceleration factor, remember, comes from up here. The increment is 0.02. So we're going to count by twos. 2, 4, 6, 8, all the way up to 0.20. And then at which point we will never increase it beyond that. So we're going to start with 0.02. Again, if you're trading shares of stock, I would probably make this 0.01, but not really a big deal either way. This factor right here, if you remember from the formula, this is one of the parts of the formula in there, and this tells us by how much we're going to increase or decrease our PSAR values. So remember, those dots either rise or fall as the stock is trending up or down. So we need to figure out by how much are we going to bump these dots up or down. Then we need an initial PSAR value. Then we're going to run through some checks and balances in there and say, well, let's make sure it didn't break these certain points. And if it did, we're going to generate a new PSAR value. And from that, we can then determine the trend. So for right now, I'm just going to give it an initial PSAR value of the high, 253.20. I'm going to also use that as my extreme point. But now, once we go into day 2 down here, let's click in that cell, and you can see the formulas start to get a little complicated. So what we're doing to figure out the extreme point is we're just saying that if L5, that's my trend over here, if that is down, I want to take the smallest value of either G4, that was a previous extreme point, or D5, which is today's low. On the other hand, that's what this if statement is. If L5 is up, which we were, we want to take the maximum of either G4, the extreme point, or C5, which was the high for today. So it's just going through and doing some checks and saying, well, what is the highest point so far? And that's how we're coming up with that. Now, another little check that we have to do is that if we get a new extreme point, which we did. Notice this one up here is 253.20, and then we go to 253.50. Not a big change, but it doesn't matter. It's a different extreme point. We're going to increase our acceleration factor by the increment. So we started at 0.02. I need to add 0.02 to that, which would make this 0.04. Then we're going to take our PSAR value minus the extreme point multiplied by this acceleration factor. It comes up to minus 0.59. For the initial PSAR value right here, you can see again the formulas are getting quite complicated in here. We're going to do some more checks. So what this is saying is that if L4 is down, so L4 was my previous trend, so if that was down, we're going to take the maximum of three different values. We're going to look at J4 minus I4, which is going to be the previous initial PSAR minus the increment, or we're going to take C4, which was the previous high right there, or we're going to take C3, which is the previous high of that. Now in this case there isn't a value there, but as this formula gets copied down, it's always going to compare this high compared to the periods before. So that's what's going to happen if the trend is down. Now on the other hand, if it's up, that's what this if statement is doing here. If L4 is up, which it is, we are going to take the smallest of three different values, that's what the minimum is, of either J4 minus I4, so that's going to be the initial PSAR from yesterday minus the increment, or we're going to take D4, which is the low of yesterday, or D3, which is the low of the previous day. That's the lowest of those three values. And so we're going to do that comparison, and that's how we're coming up with this value. So yes, I know it gets very complicated, but that's how it's coming up with these PSAR values, at least for the initial one. Now we have to check that against some other conditions, and that's what this new PSAR is over here. So the main thing that we're doing here with this new PSAR value is just making sure that the trend or the price hasn't broken through one of those PSAR values. Because remember, as I showed, whenever a candle breaches that, we have to flip sides. So let me just give you a brief rundown here for those who understand Excel. We're just doing an if-and statement. We're saying that if L4 is down, that's the previous trend, and C5 is less than J5. All right, so this is one of the conditions. We're going to say, is the high of the day, that's C5, less than J5, which is the initial PSAR? And if that's true, we want to return J5. We just want to keep the initial PSAR. On the other hand, we're going to do another if-and condition. If L4 is up, which it was in this case, and D5 is greater than J5. So D5 is over here, is the low of the day, greater than J5, which is the initial PSAR. And if that's true, again, we want to return J5, which is the initial PSAR. But then we also have to make sure that it's not going to breach any of those previous candles. So we're going to do if-and if L4 is down and C5 is greater than or equal to J5. Okay, so it's actually gone above it. Then we want to use G4. What's G4? The previous extreme point. And then finally, if L4 is up, the previous day's trend, and D5 is less than J5, in other words, the candle has gone below it, then we again want to use the previous extreme point. This is what causes the PSAR to flip. So if you remember on that graph, we saw the dots that would sit below the candles in a downtrend, and then it would just automatically jump. That's what's doing it. It's just an if, then whole bunch of conditional statements. And so that generates potentially a new PSAR. Now in this case, you can see that it didn't, because with the formulas that they remain the same. But in some cases it will. So now look over here at the trend. How will we identify if we're in an up or a downtrend? It's very simple. What we're going to say is that up here, if K5 is greater than E5, so if this new PSAR is greater than E5, which is the closing price, then it's going to be down. Otherwise, it's going to be up. So in this case, if you look at the new PSAR was 238.72, and that is less than the closing price of 252.38. And so if you look at this formula again, it's saying that if it's less than, we want to make this up. So the computer's just going to see and put this as the word up in there. And so we just continue on down through each row, and you'll see that sometimes it flips. Now let's take a look at some other interesting things here. The acceleration factor, notice that we went 0.02 and then 0.04. Why? Because we hit a new extreme point. Then we went from 253.50 to 263.02. We increased by 0.02 again. Then we increased to 269.48. We increase again. And then we go 0.10, 0.12, 0.12, 14, 16, 18, and we never hit 0.2. That's the maximum up here. Why not? Because we flipped. Look over here. We went from up to down. And so the formula says you have to go from whatever number you were on, and you have to start back at your initial increment at 0.02. So we go 0.02. Now notice over here, why didn't we increase? Because we didn't get a new extreme point. We hit 267.19 and then 267.19, so that stays the same. Same thing here, 267.19. We stay at 0.02. Then we go to 261.92. It's a new number, so we go to 0.04. And again, what this is doing is it's causing those dots to converge, getting closer and closer to those prices. So we go to 0.04. Why did we drop back to 0.02 here? Look over here, because the trend changed. We went from down to up. And so that's what's causing these dots to jump. So it's just a very big, long, complicated mess of if-then statements. So I hope that gives you some appreciation for the complexities that go into the parabolic SAR. Again, you don't really need to know any of this. It might give you a little bit of insights, but the main thing that you understand is how to read the chart. And if you can understand how to put it on your chart, it's a very simple indicator to use. For those who'd like to learn more about the art and science of options trading, please check out the Alpha Trader course and a brand new strategy lab for 2019 at optionszz.com. Also, please join us on the Facebook trading group Options A to Z, and you can find a link in the description below.